Hi, I'm Wal Galbraith. I'm a part of the Ray White South Coast Group, and this is your South Coast Snapshot for Week 10, 2024. The snapshot is designed to give you a bite-sized breakdown of the real estate market overall, including local, regional, and city-based information across Australia. All information is sourced from the AFR, leading economists on X, and the Sydney Morning Herald. All information is relevant to buyers, property owners, or both. AMP Chief Economist Shane Oliver said the surge in listings could be fueled by more vendors taking advantage of the recent rise in prices. But it could also involve higher levels of distressed listings starting to come through. Mortgage interest payments are now around record levels as a share of household income, which means many households are likely now experiencing severe cash flow problems and may be forced to sell, he said. It's possible that the recent cautious commentary from the Reserve Bank has also suppressed demand. Home values in regional markets are rising faster than those in capitals, as higher interest rates hit the cities harder and migration to region escalates amid cost of living pressures, CoreLogic data shows. In the past 3 months to January, home values across the combined regional markets increased by 1.2%, compared with the 1% gain in the combined capitals. The loss of growth momentum in Sydney and Melbourne because of worsening affordability and higher rates had dragged down the combined capital cities' overall performance, said Tim Lawless, CoreLogic Research Director. Regional markets are outperforming the capital cities largely due to a slowdown in capital city growth rates rather than an acceleration in regional growth, he said. I think a lot of these regions aren't as sensitive to interest rate movements as what you might find in the capitals. So I wouldn't be surprised to see the capital cities posting a stronger performance once interest rates are cut, especially in markets that have really stabilised and gone through some level of downturn like Sydney and Melbourne. A clear majority of voters back the case for tax reform that can help young Australians buy their first homes, with 59% in favour of using stamp duty exemptions to make housing more affordable. An exclusive survey also shows that 40% of voters want changes to negative gearing on investment properties as one option to scale back tax concessions, while 26% oppose the idea and the rest are unsure. The findings come as the Greens call for an end to tax handouts for big property investors, while the Gitran Institute and other policy advocates name negative gearing as a good target for reform that could help recoup tax revenue and help new home buyers. While 36% of voters support a reduction in tax concessions on capital gains, another 24% oppose the idea and 39% are undecided. Mounting pressure from higher mortgage costs and increasing regulation could be prompting more residential landlords to sell their investment properties, potentially shrinking the already low rental supply further and fueling another lift in rental growth, new data shows. The number of ex-rental homes listed for sale jumped by 30% over the year to January, lifting the total to 11,950 nationwide, according to the data from property and analytics firm Suburb Trends. The proportion of investor-owned listings has ballooned to 18%, up from 16% a year ago, Tim Lawless, CoreLogic Research Director, said the widening gap between the cost of a mortgage and rental income could be starting to squeeze some landlords. The cost of servicing a $500,000 mortgage has increased by about $447 a month over the past year, and monthly repayments have lifted by $1,580 since interest rates started to rise. Rental income for landlords hasn't increased by anywhere near this amount, with rents up approximately $202 per month nationally over the past 12 months and $463 a month higher since the first rate rise in May 2022, Mr. Lawless said. Given the large difference between servicing costs and rental income, there is a good chance that a growing proportion of investors are feeling some financial pain and may need to sell their properties. The number of investor-owned listings more than doubled in Tasmania and Northern Territory over the past 12 months and climbed by 68% in the ACT. Ex-rental listings surged by 47% to 3531 in New South Wales. It jumped to 52% to 3249 in Victoria and lifted by 30% to 605 in South Australia. In Queensland, 2699 ex-rentals were listed for sale, accounting for 18% of all stock on the market. Meanwhile, in Western Australia, 1332 investor-owned properties were offered on sale, which comprised 19% of all listings. Investor-owned listings now account for 18% of all listings in New South Wales and Victoria, up from around 15% 1 year ago. The spike in ex-rental listings has led to 34,701 bedrooms lost in the rental market last month, highlighting the impact of investor exodus to the rental market, according to Kent Lardner, Director of Suburb Trends. Headline inflation held steady in January at 3.4% as ongoing price pressures in the housing market offset outright price declines in pantry staples like beef and seafood. While the figures were a little lower than market expectations for inflation to increase to 3.6%, they are unlikely to alter the outlook for monetary policy due to the volatility of the monthly consumer price index. Home values nationwide gained momentum slightly in February, rising by 0.2 of a percentage point to 0.6%. Their fastest growth rate in 5 months, bolstered by increasing optimism over potential interest rate cuts later this year, data from CoreLogic shows. Melbourne values emerged from a 3-month slump, gaining 0.1%, while Sydney dwelling values increased by 0.5% after drifting lower in November and December. Tim Lawless, CoreLogic Research Director, said home value growth had likely hit its lowest rate in December based on the recent 2 months results and could continue rising from here, albeit at a modest pace. The outlook for home values brightened since the end of last year, with the subtle but widespread re-acceleration in house price growth, fueled by a lift in housing sentiment as expectations of a rate cut or cuts firm up, he said. Looking to make the best use of the current market or considering your financial options. If you're either expanding your property portfolio, refinancing, or looking to sell your current property, get in touch today. We'd love to help. I'm Wal Galbraith with the Ray White South Coast Group, and that was your South Coast Snapshot for Week 10, 2024. See you next week. Be well.